think stock charts look like random squiggly lines? You're not alone. Today, we're going to show you how to read a stock chart without feeling overwhelmed and how to understand what actually matters for long-term investors. Give us 5 minutes and you'll never look at a chart the same way again.
In this video, we'll break down the basics of stock charts in a way that actually makes sense. No jargon, no technical trader stuff you don't need. You'll learn what those little candles mean, how to tell the difference between real long-term movement and short-term noise, and why beginners shouldn't obsess over charts in the first place.
Let's start with the simplest version of a stock chart, a line. One single line showing how the price changes over time. But most charts don't stop there. They use something called candlesticks, which look like tiny rectangles with lines coming out of the top and bottom. What they actually show are the open price, the close price, the highest price during the period, and the lowest price during the period. That's it. 4 pieces of information. If the candle is green, it means the stock closed higher than it opened. If it's red, it closed lower. It's basically a visual way of showing whether investors were feeling optimistic or nervous during that time. You don't need to memorize patterns or shapes. Just understand that each candle shows the story of one time period, open, close, high, and low.
The part that confuses beginners is that stock charts change depending on the time frame you're looking at. A one-day chart shows every tiny movement, every spike, every drop, every emotion-driven reaction. But if you switch to a one-year chart, those tiny movements disappear and you can finally see the bigger picture. Think of it like zooming out on a map. The closer you zoom in, the more tiny twists and turns you see, and the more lost you feel. Long-term investors do the opposite. They zoom out.
A one-day chart makes everything look chaotic. A one-year chart shows that long-term direction matters more than short-term noise. If you're investing for years, stop staring at daily movements. They don't matter.
Let's talk about the difference between a stock's history and its noise. Noise is all the little squiggles, a random drop at 10 a.m., a small spike after lunch. None of it means anything for long-term investors. Price history, on the other hand, shows the real trend. Is the company growing over years, or has it been slowly declining? A good rule of thumb is, if the movement doesn't matter in 5 years, it doesn't matter today. This mindset is how you invest without losing your mind.
Volatility is a fancy word for the price goes up and down a lot. And stock charts love showing volatility because it makes things look dramatic. But volatility is normal. It's not a sign that a company is collapsing. It's just how markets behave. Long-term growth, though, is different, and it shows up when you zoom out on the chart. 1 year might look scary, but when you look at 10 years, it's much calmer. That's why many long-term investors choose broad market ETFs, not because charts are perfectly predictable, but because trends over decades tend to smooth out the chaos.
Short-term volatility looks wild, but zoom out and you'll see the long-term trend. Most of the drama disappears. If you're investing for your future, don't make decisions based on a one-day panic drop.
This might sound weird in a video about reading charts, but if you're a long-term investor, you really don't need to study charts every day because charts don't tell you whether a company is profitable. They don't tell you whether people actually want that company's product, and they don't tell you if it's a smart investment for your goals.
Charts show price movement, not business fundamentals. That's why many people focus on the company's long-term performance, the overall market trend, and their own savings rate and investment consistency. Those things matter far more than whether the stock dipped 1% this morning. So yes, learn to read charts, but don't give them more power than they deserve.
Here are a few key things you should pay attention to when reading a chart. First, look at the time frame. Are you viewing 1 day, 1 month, 1 year, or 5 years? Next, identify the overall direction. Is it trending up, down, or sideways over the long run? Then look at the candles. Green candles show positive days or weeks. Red show downward moves, normal either way. And finally, ask yourself whether this movement actually matters for your long-term goals. Most of the time, it doesn't.
Stock charts look complicated, but they're just tools. You don't need to learn patterns, memorize shapes, or become a technical trader. Just understand what the candles mean, zoom out, ignore the noise, and focus on long-term growth. If you can do that, you'll already be ahead of most beginners.
If this made stock charts finally make sense, let us know in the comments. Remember, you don't need to be an expert to start investing. You just need to take the first step. Thanks for watching and subscribe to our channel to catch the next video.
Hey, we're the money-wise couple.
We're not financial advisors, just a regular couple who
Paid off our debt, invested our money, became financially independent,
and we're here to help you do the same.